Okay. Yes, okay. Back on dashboard. Alrighty. Okay, welcome guys. Welcome to another market breakdown. It's your boy Skrill. So this thing before I start, I just want to make it clear that what I'm doing here is a technical analysis. I am not telling you that the market is gonna go down or it's gonna go up. We're basically doing technical analysis, right? So we are basically executing based on market direction, right? We are not gonna say, okay, then I feel like the market is gonna go up, or I think the market is gonna go down. No, we are basically doing what the market is showing us. Okay, so I just want to get that clear. Uh, Screen blank. Uh, well, I'm just trying to get things on point here. Stop sharing. Says screen blank. All right. I have a team in the background that's making sure everything is good. Please check again. The camera is on. Uh, you good now? Okay, okay. Team just say I'm good to go. All right, guys, back again. All right, so you know what? Let me check. Hold on. Think on the what happened. Share screen. See if I can box open it bigger. Mm. Share. Okay, let me check if good again. Still good. Yeah. Okay, perfect. So it's still good. All right. So, like I said, guys, earlier we're gonna do a breakdown of the market. So basically, what I'm gonna establish is the overall trend of the market to know if we should look for buys or sells for this coming trading week. Okay. So we're still in the first quarter of 2026. This quarter is gonna end March. So what I normally do is to check where or what the market did last year, April 1st. So I always try to highlight that specific year of the market. So which will be April 1st of 2025, or it can be April 2nd, depending on when the market or that date corresponds. So it should be this right here. Do this on a daily. Welcome again, guys. Weekly market breakdown. For those of you who don't know me, name is Squirrel, favorite Yardman trader. All right, April 1st, April 2nd. Okay, right here. This is our right for April. Okay. All right, guys. So we're doing technical analysis, technical analysis. All right, fundamental. That will be news. Technical is when you go on the chart physically and you lay out your edge. You find your trend of the market, look for your entry signal, then you enter your trade from time frame to different time frame. However you do it, but I'm just gonna break it down based on how myself and my team do it. Okay. So first up, we got our top 3 peers section right here. As you can see, I have more than 3 peers. So last week we were eyeing 7 peers right here. However, our top 3 was Canadian against the JPY and the Euro against the British and the GBP against the Swiss franc. That was our top 3 last week. Okay, so let's look at CAD first. And these right here, these are all of the markets that we have on our watch list. So it all depends. This can be different. It changes every week. We probably got different top 3 peers for this week. But yeah, always change. Okay. So what we're looking at here is the weekly time frame. So what I like to do first is to get our line chart up. And this will give you a clear indication as to where the market is going. And you can clearly see that this pair is definitely bullish, right? Now we can see the market create a low right here. This is our low. And then we have a high right here. And this was our high, right? Was. The reason why I say was is because this high, you can clearly see where the market is currently sitting above it. See that? Market is currently sitting above it. Now you probably like why I went to the line chart. So the line chart basically gives you a more clearer understanding as to market structure, right? Now we know that in order for the market to move, it has to create market structure whilst it shifts. Thinking of it like a train on a track going from one point to a next point, it's gonna take it's not gonna go as sharp as you see the market make these turns. We all know that. But the train gonna change direction as it turn like a snake, speeder and shooter, Amazon or the jungle, it is gonna turn, right? So these here are our market structure. Anywhere the market shift, it is considered as our market structure, right? So like I said, we found our low and now we have our high, right? However, this right here is a old high. This would have been our new high. The part of the market is closed, right? So this would have been our new high right here, okay? And this is the weekly time frame, guys. So we have a new high, and then we also now have a new low. See that? Pretty easy, right? So we can clearly say that the weekly time frame is currently bullish, right? And if we put our candles back on the chart, we can clearly see where this is where we should have interest in this market within this space right here. Okay. Now, if you notice where the candle closes, that is where I put this line. I didn't put them at the wick. See, because this is where price came. Right? It's not there. I mean, it came there, but it take off, went back to the upside. But this is where price closes. So wherever price close, that's your strongest point to say, okay, then yes, this is where price literally closed at this level, which gave us that low on the line. See that? Right here. See that? Perfect. Now, we're going to go down to the daily time frame now. And you can look at this on the daily time frame. Now, the weekly, this is a weekly low. This is a weekly high. Now, if you notice, the daily has a low right here. See that? Reason being, the market created what we call a gap. See the gap right here? So the market closes on January 23 right here, and it opened, started the week for January 2026 with a huge gap. So price falls. Now the reason why the gap comes in the market, because we have to remember this. Whenever the market closes on Friday, it does not mean that the world stop or go to standstill. People still making transaction. Banks open in most countries, right? People traveling back and forth. People still using fuel. Companies still executing and doing their production, selling and all that. Never stop. Amazon still going on. Everything's still moving. Never stop. So when the market open, based on price action, whilst the market was closed, then you will see the reflection when the market open. Hence, we have this huge gap right here. Okay. So it is safe to say that this time frame is also bullish. So the weekly is bullish, and now we have the daily, which is also bullish. Now, if we were to take this down to the 4 hour, we can clearly see again that 4 hour is bullish. The market has been creating higher lows. See that? One right here. And then we got the next one right here. So the 4 hour, definitely bullish. So now we got 3 time frames in sync, right? Weekly is bullish, daily is bullish, 4 hour is bullish. So it's clear to say that, hey, okay then, this market is trending up. So we need now to look for what? Buys. You would not want to come in this market and look for sells. That would be a counter trend trade. Not saying you cannot take counter trend trade. However, counter trend trades are extremely risky, right? So what I'll do now, myself and my team, once we identify that the market is in a bullish trend, what we're going to look for now is our area of interest, right? Or AOI, or some people might say your key zone. Okay, so what we do now, we can identify this as a valid area of interest. Reason being, this gap in most cases tend to let the market react. When I said react, think of it like a sleeping police, a car driving, or we say a speed bump. Once the car approach that, the car slows down and gently go over such over said sleeping police, and that's just to reduce speed, right? So think of this as a speed bump. When the market get back in this gap right here, which I just explained the speed bump analogy, it will then slow down. So in most cases, the market get in this here right here, it will stop or it will bounce back to the upside. So that's the only reason why we're taking this in consideration, because it's a gap, right? Now, if you notice behind this gap, we also have price react at this level, and then also react at this level. So we can clearly say that this gap is also a strong and valid area of interest, because you can see we got 3 touches. Where the market touch 1, 2, 3 or more times, very strong area. Not once, not twice, but 3 or more times. And there we go, 1, 2, and 3. And we can also safely say that right here, the market also react at this level. See that? Because price was here and it came back and then went back out. And this is how the gap comes in to tie in with your area of interest. And this is your daily time frame, right? Now we find out area of interest on daily time frame because the daily time frame is what I use to know, okay then, where this week is going. You can find it on the weekly time frame also, but see, it just look a little choppy on the weekly. But we are still bullish because price is above our area of interest and we are looking for price to tap back in our area of interest. However, on the weekly time frame to then look for sales or no, or buys. No, the reason why I say look for sales is because the fact that we are bullish. So this market went up, stops back in this area and it pushes up. We don't control the market. The market can then break this gap right here, or this area of interest, whatever you want to call it, to then retest it and go to the downside. See that? Or the market can, and most likely do this, pull back in this area again to then head to the upside. Because remember, we are in a bullish market. Once in a bullish market, your best bet is to look for buys, right? So now, clearly say this market is bullish. So for the week, what you will do if you want to trade the forex currencies is to set your alert in this space right here. See that? Once the market get in this area, it will trigger your alert, and then you will look for your entry signal, right? To then execute your trade based on your entry signal. And again, I always say to you guys, never take a trade on Sunday night or Sunday when the market open. You have to allow the market to breathe, to get back its rhythm, get back on track. So the best time to enter a trade is after Monday ends. The market must close on Monday, then reopen. That's the best time to look for entries, whether pre-London session Monday night or Tuesday morning New York session. Okay, that's basically it. So pretty easy, not a hard task. As you can see, it's very clear. The market is definitely showing you what it's doing. It's not no secret. It's just for you to be patient and execute a trade whenever the market get in your area of interest. When I just start trading, I used to wonder and ponder about people saying, how should you wait for the market to get to your area of interest to then sell or buy? I thought once you go on the market and you see a candle jump, pushes like this, you just immediately jump in for the buy, right? That's you catching a moving bus at the bus stop. Bus never stop to pick you up safely, and you just jump on the bus, right? You're gonna get hurt. There is no doubt about that. So what I've realized over the years is that you have to wait for the market. So if we're gonna look for buys right here, I don't know how to enter on the 4 hour time frame, but just for an example, you would already have your position tool set, right? And if you're targeting back this high when the market pulls back, you would then factor in your risk, right? Now your risk can be factored in based on your rejection candle or based on your risk factor or where price comes. Okay? And this is what you call waiting for the market or waiting for price or the market to come to you. You don't want to be chasing price up here trying to buy at this high. Not saying you can't do it, but it's going to be extremely risky. Okay? So you wait for price to come here for the sell. If it break this level, then you wait for the market to give you the entry signal for a sell, and you find your risk, and you come back for this low or wherever your risk tolerance is. You can go for a 1 to 2. Pretty easy. Okay. So that's it for CAD. If you guys want to do a more in-depth market breakdown with myself and my team, you can always message me on YouTube or on IG, Be More FX Trader, or you can join our Discord also at Be More FX Trader. Okay, so that's market breakdown for CAD JPY. This is what we do every Sunday, and we analyze all these pairs right here. Not to make the video long, so that's it. Check us out. Thanks for watching this video. Like, subscribe, and share if you haven't done so. Thank you guys. Peace out.